Welcome to Insights into Insurance from the A-Team at Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.
It's a Saturday morning. That means it's time for Insights into Insurance with Americana Insurance. And this Saturday morning, we welcome in Tom Sorensen. Good morning, Tom.
Hey, good morning, Mike.
I know last week I didn't do very well, but we had a lot of comments from folks saying, boy, I liked the way that show was, so we're going to do...
Wait a second. You said you didn't do very well. It was a pop quiz, and you got 4 out of 5, okay?
But I saw my score, and I can't take pride in putting it on the refrigerator at home because it shows up as a B.
It's, what, 80%? You know, we come from the decades or whatever, the years of 80% was a B. B minus, okay? So, although I talked to a former teacher of ours back this week, and he listened to the show last week, and he said Mike never got 80% on any test in high school. So he said only when you copied someone else's work you would get the B.
Thank 80%. Goodness I'm out of high school and out of college, and we're going to now work on Americana Insurance and our insights into insurance. Pop quiz number 2, and for those folks listening in this morning, no, Tom just handed me these sheets, so I'll read the question. Tom's going to read the potential answers, and then I'm going to try and come up with maybe some better numbers for this week's show. So you're ready, Tom?
All right, let's begin, huh? You're gonna read the question, correct?
I'm gonna start right now. Question number 1: A personal lines client has just called Americana Insurance to say that his wife has left him and taken one of his cars. He wants us to remove his wife from the homeowner's insurance and take the car off the policy immediately. In this case, Americana should...
And the choices for your answers are, Mike, is A, comply with his request because he is the named insured. B, comply with the request to remove the auto, but you cannot remove the wife from the homeowners until it is retitled. C, you cannot remove the wife from either the homeowners or delete her vehicle without express written request from the wife. Or D, send a loss policy release to the husband and have him sign the wife's name.
I don't think it's D. I would say C. You cannot remove the wife from either the homeowner or delete her vehicle without express written request from the wife.
Ding, 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 ding. That is correct. And you guys would be amazed, or our listeners and you would be amazed at how often this happens. Okay? The other thing that I would probably warn people about is a lot of times we get significant others that are added onto a policy, so they might not be married or girlfriend, whatever, but they live together. The issue is it's fine and dandy when everything is going okay, and I don't wish upon anything that it doesn't, but let's say they break up. To get that person off the insurance is a difficult task, and it can be quite challenging sometimes, and we kind of get stuck in the middle of some things.
And you have to be careful in the fact that maybe that other person's going to get into an accident, and then you're going to be liable as well.
Right, and it's going to be on your insurance. Yeah, exactly. You're right. So, anyway.
If you run into that, you have to have express written request from the wife or the significant other or the girlfriend or whatever before they can actually take you off that policy immediately. So 1 for 1. How about that? Let's go to number 2. The homeowner's policy is a package form because it provides both property and liability on the same policy. The purpose of the liability is to pay for defense costs and damages. How does the defense cost apply in a liability case? And the answers are...
Yeah, the answers or choices are A, the cost of defense is covered in addition or sometimes referred to as outside the limit of liability coverage. B, the defense cost is part of the limit. For example, if the limit written is $1 million, that would include any judgments and defense coverage. C, The defense cost is provided as a sublimit of the amount of liability written. It is usually 10%. For example, if the liability is written for $1 million, then the defense will automatically pay or could pay up to $100,000. Or D, the cost of defense is part of the limit and will only be paid after the claim is settled in favor of the insured. If there is no judgment, there is no defense reimbursement.
Oh, let's see. And this one's going to be a shot in the dark because there's
tough.
a lot of examples
Yeah,
here.
tough one.
I'm going to go with C once again. The defense cost is provided as a sublimit of the amount of liability written. It's usually 10%.
That's my wrong answer sound.
Ouch.
Yeah, no, the cost of the defense is covered in addition, or sometimes referred to as outside the limit of liability coverage. So if somebody sues you and the insurance company, has somebody that defends you, that's not part of the limit, it's outside the limit. So let's just say let's say they sue you for $1 million and your policy pays $1 million, but your defense cost $200,000, it'll still pay outside that limit.
So, Tom, as we're talking insights into insurance here, doing some second part of the trivia, how would a person know if they have that coverage or not?
Well, and it normally does have that coverage as long as it's a covered situation within the policy. Okay, you have that defense coverage. So, and that's what I always tell people is sometimes it's not necessarily, the liability coverage isn't always there. One of the biggest things we have is somebody suing somebody for something that could have happened, might not have happened, could be a frivolous lawsuit, but you know what? You still got to defend yourself.
Absolutely.
And go ahead.
And it's a case of if you don't know about this coverage, as we've talked previous on the Saturdays, Americana Insurance will put those puzzle pieces together to make sure that your puzzle is complete. This is another case that maybe you're not even aware of what you have.
Right. So, and that's one of those things where if it would be covered or a situation of that would be covered under your liability coverage, you would also have this coverage along with it. So just so you know.
A lot of people are sue happy, so you want to make sure that you have things covered. If you're right or if you're wrong or if it's frivolous, make sure that you have that coverage as well.
Yes.
So 1 for 1 is as Mike moves on to the next question, and that is, on a homeowner's policy written on an HO0003 or an H03 basis, what is typical insurance to value clause on the dwelling that is required for the insured to qualify to receive replacement cost?
Yes, and so on a typical HO3 policy, which is a typical homeowner's policy, that's the form number they use. Anyway, to receive replacement cost or required to receive replacement cost, the insured the answers would be for replacement cost would be 100%, that you have to have the insurance to value at 100%. A. B is 80%. C is 50%. D, there is no requirement on a homeowner's policy. It is only required on a commercial lines policy with a co-insurance requirement.
Another tough question, and I'm going to shoot from the hip, and you always have to go with your gut feeling. I'll say letter D.
D, there is no requirement on homeowner's policy. It is only required on a commercial lines policy with a co-insurance requirement. Oh boy, Mike, you're having a tough week this week.
I am.
Yeah, you should have quit while you were ahead last week, Mike.
That B's looking pretty good right now.
Actually, on a homeowner's insurance to value clause on a dwelling that is required for insured to receive replacement cost is 80%. Okay, so most homeowners policies require you to be at least insured to 80% of replacement costs to receive replacement cost benefits. Now, obviously, you're going to say, well, wait a second. If I'm insuring a home, let's just say I'm going to use $100,000, just a nice easy number, okay? And I got it insured for $80,000. Well, I'm not going to receive $100,000. That's replacement cost. No, you're right. You're not. But to receive a replacement cost on, like, let's say a roof, damage, and you wanted to get the roof replaced, you have to have at least 80% coverage of replacement costs to have that done.
So another key factor is when you're looking at your insurance policy, you have to make sure that you have the right value of your replacement cost. You may only have on a $100,000 home, you maybe put an insurance policy together, let's say it's 5, maybe 10 years ago, and now the cost of all of these items has significantly risen. You're not going to get that full replacement, and that's where I think a lot of people get shell-shocked and saying, well, wait a minute here, I did pay for my homeowner's insurance policy, I should get full 100% replacement cost.
Right, and there is some things that we can do to, what do I want to say, fight that. Okay, we put on inflation factors on these homes when we write them, so the automatically increases 1%, 2%, 3% every year, so that doesn't happen. But also, too, I would suggest that you should do a review at least every 2 or 3 years to make sure that replacement cost is up to date. Matter of fact, I just did about 8 of them yesterday. So
a lot of people don't realize that inflation costs and simple things that maybe you went out and bought a new refrigerator, you bought a new microwave, you bought a new stove. Those are all items that add up, and you may have paid a lot less money for those 5 years ago than it's going to cost now.
Absolutely.
You're listening to Insights into Insurance with Tom Sorensen and Americana Insurance. We've got some more questions to go, so we'll take our first break here, Tom, and when we come back, we're going to go and see if I can maybe increase that letter B from last week a little bit better.
You better hope so.
I've got some work to do. This is Insights into Insurance with Americana Insurance here on KATE.
Nationwide is on your side. You have a side that is retired, playing tag and getting tired. A side that owns your own store. Looks like you need to explain some more. That's why there's a Nationwide. They help protect and grow your many sides. Nationwide is on your side.
Nationwide Mutual Insurance Company and Affiliates, Columbus, Ohio.
For all your many sides, there's Nationwide. Call Americana Insurance Group in Albert Lea and Wells today.
Welcome back to Insights into Insurance with Americana Insurance. Tom Sorensen, along with myself, Mike Whitus, and it's quiz day here with our Insights into Insurance, and I've got a little work to do, so we're going to jump right into the next question. And if you're just joining us, I'll read the question, and Tom's going to read the possible answers, and then, of course, I'm going to try and choose the right one. So
far, you're 1 out of 3. That's like 33%. No one's keeping track, though.
Right. Nobody's keeping track. Again, it might not be a case of putting this on the refrigerator with a smile on it. Here we go. Americana Insurance Group client just called to tell us they slammed their daughter's hand in the car door. How would this loss be covered?
In the answers, or potential answers, are A, auto medical payment coverage, B, auto liability coverage, C, covered under supplementary coverage as a sublimit for injury to family members, or D, there is no coverage because it is the daughter of the named insured.
I want to say it's going to be covered under your auto medical payment, or number A.
Ding, 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 ding. You are correct, Mike. Ooh, you're coming back now. You're
I'm coming back.
Yes, and you are correct. Something like this would be covered under your auto medical payment coverage, which is I've actually had people slip and fall out of their vehicle, okay, when they've gotten out, and that it covers under their auto coverage. So that's for a chiropractor or back, you know what I'm saying? They've hurt their back or whatever. So, yep.
Would this be covered, Tom? Say the daughter in this case slammed her hand in the car door, and would it be covered if it's maybe not a family member, or maybe it's someone else that's in the vehicle with them?
Yeah, no, and then that would actually go under that individual's auto policy, because that's part of the PIP coverage in Minnesota, the no-fault coverage, where medical payments of any kind on an auto policy extend from your own policy. So example, Mike, you hit me in the parking lot, okay, you run into me with your car, actually my auto insurance coverage would cover the medical portion of it, okay, up to $20,000 or whatever the coverage is that you have. That's the normal limit in Minnesota. But now what if I got hurt really bad and then I come back and have to sue you for, all those good things, that you did to me.
Okay.
Okay.
So just be careful out there, especially, and make sure that you're being careful, not only driving, but making sure when people are getting out of your vehicles or what have you, that it could be a long lawsuit as you move forward. We got time for one more, Tom. And what am I, 2 for 3?
You are
close to it.
2 for 4 so far today.
Oh, okay. So
this
here we
is
go.
the fifth question.
Which of the following is an example of a third-party claim?
Yep. A lawsuit against an insured driver who has negligently caused an auto collision. B, a claim against a homeowner for someone who trips on a broken step at the entrance of their home. C, a claim because an insured's child threw a softball at another player and broke their nose. Or D, all of above.
All of the above.
Ding, 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 ding.
I came back.
You came back. So, what is a third-party claim? Well, a third-party claim is, first of all, the first party is the insured.
Right.
Okay. The second party is the insurance company. Third party would be the claimant. Okay. So, yeah, all those situations was a liability claim or a claim against an insured, and so that would be a third-party claimant. So all of them.
Not too bad. I think folks enjoyed the trivia questions, and I tried to do my best. And again, it was a pop quiz, and I'm not very good at pop quizzes, but I came back, and we'll see what the letter grade is next week.
Well, so in the 2 weeks that we've done this now, you got 7 out of 10. Not too bad. That's a C. Okay.
Okay.
Yeah. Pretty much probably what you and I got for high school grades. So,
and here's a good point, folks. I scored C, or 7 out of 10, because I'm not aware of all of the insurance issues that I may have with my homeowners, with my auto. That's why you need to give Tom Sorensen and the professionals down at Americana Insurance, get a call into them, set up an appointment, and we've talked about putting all the pieces of the puzzle together so that you know exactly how things are covered and you're not going to be surprised at the end.
Yes, and if it's not us, make sure you talk to your professional, whoever you deal with on these items. Yes.
To get a hold of you, Tom?
They can call us at 507-377-2000, or they can email me or email about the show at insights@americanainsurance.com, or go to our website at americanainsurance.com.
That's going to wrap things up for this Saturday morning. I think I'll take my letter grade.
Should I give you a diploma now, or?
Let's wait, because I've got the B still on my refrigerator, so we'll leave it there.
All right.
That'll wrap things up. Tom, have a great weekend. Thanks for coming in.
You too, Mike.
All right. That's Insights into Insurance with Americana Insurance here on 1450 KATE.
You've been listening to Insights into Insurance from the Americana Insurance Group. All information provided is educational in nature and not intended to be acted upon without first consulting the appropriately licensed professional.